Hey everyone, welcome to a Optimum FX weekly analysis. It's currently 8:15 on the 1st of August 2021. We're currently going to be doing a weekly analysis for the upcoming week. We must bear in mind that it is the first week of the month, and it's essentially 12 hours until market open, so Asian session open. Okay, so initially we will be looking at what macroeconomic data is going to be released across our major economies. Once we've discussed that, we will go to the charts and map out any technical ideas, and once we have the fundamental confirms, we can map out potential trade ideas, okay, with the macro and technical biases. Okay, so firstly we're going to quickly have a look at what macroeconomic data is going to be released this week. Yes, NFP is going to be released this Friday. Every single Friday, first Friday of the month gets released, in case you didn't know that. Anyways, so we're going to quickly have a look, just skim through what's been released this week. I don't want to make this video too long, but we'll end up seeing how long it goes for. Alright, so we do have PMI data being released for the week. We do have ISM data, which we're not too familiar. ISM is Institute of Supply Management, and when it comes to ISM data and market PMI data, so PMI data is essentially, just to give it like the quickest summary, it's just a report about certain industries, certain sectors in the manufacturing. ISM, Institute of Supply Management, keyword supply. It's just talking, it's just getting surveys from multiple industries and sectors, and then essentially forecasting their growth in that industry, what their forecast, what's happened in the last few months, talking about inventory levels, forecasting results, obviously forecasting inventory, talking about employment, and just talking about the whole industry, and what they're forecasting in the coming months or in the coming year. So yeah, if you do ever want to read that, it will go into detail about what each industry is going through and what they're forecasting coming months. And if you did want to look in further, you will notice a thing called seasonal tendencies. I will not go into that. I will probably go into that one day, but I just want to focus on what macro data has been released. Okay, so we do have on Tuesday, we do have factory orders being released. I'm just going to go through like the most impactful data that's going to be released throughout the week. We do have weekly mortgage applications, ADP employment change, more market and ISM data being released. We do have challenger job cards. If you're not familiar with that, is essentially, to be very blunt, it's essentially how many people got the sack. It comes out every single month. So obviously a high number is actually bad for the economy. And what does that mean? Obviously US equities and our risk assets will probably depreciate, with Dixie continuing to rise. Okay, might sound a bit confusing, but I'll get into it. We do have goods and services trade balance, jobless claims, so many people applying for government unemployment benefits. We also have on Friday, we also have NFP. So this is the most important employment data when it comes to America. It's just talking about the amount of people that are currently employed, which excludes the non-agricultural industry, hence non-farm. So if you want me to sound like an idiot, so non-farm workers. Okay, it's their payrolls. How many people got employed? How many people got the sack? It's just kind of just telling you the difference or the increase or decrease in employment in those certain industries. Okay, obviously subsequently to that, we do have average hourly earnings, like all the employment data that you want to hear, but NFP is like the main one, and essentially they all get released at the same time. So yeah, we got we've got the unemployment rate being released later in the day. We do have wholesale inventories, and for anyone that trades oil, we do have Baker Hughes US oil rig count. Okay, so moving on to Europe, We do have market PMI being released, PPI data being released, which is the inverse of CPI. Essentially what the producers are paying for goods and services. And we do have retail sales, which is gonna, that's gonna bring some volatility to the euro and euro equities. It will just essentially outline consumer confidence within the economy. With these lockdowns, I'll let you decide what you want to think about that. So we do have like a manufacturing PMI. We got PMI across the board, across our major economies. We do have, more importantly, on Thursday, we do have the Bank of England monetary policy, so which is where they talk about the interest rate, cash rate. So they all get together, obviously talk about how the economy is going. More than likely, in case you're not familiar, the Federal Reserve always has their meeting like a week before everyone else. Like always a week. And whether it's the Bank of England, ECB, Reserve Bank of Australia, whoever, they will, more, especially with the major economies, they will always, without a doubt, follow what the Federal Reserve is doing. Emerging markets, they're a different beast. I know, for instance, the Central Bank of Russia hiked their interest rates by 100 basis points just because of the increase production of oil. I'm not going to get into that. So we've got to bear in mind that more than likely with these COVID variants, increased lockdowns, increased restrictions, it's more than likely going to be a dovish tone. If anything, like if you want to see the sterling sell off, I will mostly talk about negative interest rates, but they will downplay that, saying, we're not at a point in time to implement negative interest rates. The economy is still booming well, employment is still good, inflation is starting, inflation numbers are currently transitory, they will be anchored at 2%, yada yada yada. Just a bunch of bullcrap the central bank members keep talking about. Anyway, so I'm going to get into too much detail about that. We do have Halifax house prices being released at the end of the week. But there's going to be a bit of indecision especially on Thursday, early in London session, because this comes out heading towards New York session. So yeah, just be very cautious. So this gets released late in London session. Anyway, so moving on to Japan, we do have consumer confidence index along with CPI numbers. We do have the 10-year bond auction. Bond auctions aren't really going to impact equities nor currencies, so just keep that in mind. What else do we have? We do have overall household spending, which is essentially consumer confidence, because consumer confidence is just like what the general public thinks about the economy. It's just because essentially the economy runs on consumers, not so much producers, consumers, because at the end of the day they have to pay for the product. Okay, so that's essentially how the economy runs. So by consumers. So more than likely, whatever is stated in consumer confidence index is more than likely going to be correlated with overall household spending. Okay, so moving on, we do have leading economic index and the week. So moving on to Canada, we do have a bank holiday on Monday. PMI data along with building permits early to midweek. We do have essentially trade balance data. Import, exports, international merchandise trade. Quickly want to have a look. If this doesn't mean trade balance data, then I don't know what it is then. So, just kidding. So, just bear in mind that this is essentially, it's either going to be a surplus or a deficit. And obviously it says in a range here. On Friday, we do have employment numbers coming out as usual every Friday, first Friday of each month. And we do have PMI data being released as well. So moving on to Australia, we do have the interest rate decision with the RBA. So let's just talk about what's been released initially. We do have PMI data being released, inflation data being released as well later on Monday. On Tuesday, we do have home loans, building investment, which is just consumer confidence. And like I said, we do have the interest rate decision. And like I said prior, with the Bank of England, more than likely they will stick to the same tone as the Federal Reserve did. Okay. And on Wednesday, we do have retail sales. consumer confidence, trade balance data, and we do have RBA governor, Low speaking, along with the monetary policy statement and the week. So that's just, yeah, so yeah, so to end the week. So let's quickly move on to the chart. So I've gotten rid of, all my hard, all my key levels. Just wanna, just quickly have a look. Just pull up a clean chart, okay? So obviously, like, we can definitely see that we're in a strong risk-off sentiment, like strong, like, these US, like, all of that risk currencies have been selling off, obviously, with like the continued fear across the world. Like, the main fear that we have at the moment is just the COVID variants. Like, that is the main fear. And then what does the COVID variants mean? It means increased lockdowns and restrictions. So what does increased lockdowns and restrictions mean? It means businesses have to close down. And finally, what does it mean when businesses close down? Their revenue decreases. What does that do to an economy? It stagnates. It contracts. It doesn't expand. It's like, it's contractionary. So that's why we've been seeing a massive sell-off. Unless they can supposedly get this flu under control, yeah, like 100%. This thing could like start to flip. But we must recognize as well, when I'm looking at Dixie, right, we did get some strong rejections off. We didn't get like an aggressive double top here, but we did generate a lot of buyers exhaustion. Once we break and retest below here, because we did get a flush move to the upside, once we break and retest below here, we will just melt down, and then we will most likely see our risk currencies start to appreciate and bounce off these lows. Okay, so what am I looking at when it comes to the Aussie this week? Okay, when I'm looking at the Australian dollar, I'm very cautious of the interest rate decision, which is on Wednesday, I believe. Tuesday. So yeah, that's on Tuesday. But on a technical standpoint, I'm not going to really forecast what price is going to be doing on Tuesday. But what I can recognize is essentially, key levels that I'm really looking out for, just with the recent prices over the last couple of weeks. So very quickly, what I'm looking at here, I'm looking at if we can get some nice candle body closures above here, kind of just respect this little liquidity zone here. We can definitely consider this as our previous order block high, and now our order block low. So we are playing this little range here. We did do a nice little retest here, but there wasn't enough buying pressure. So we did continue back down to this range. So what am I looking for now? I'm looking, if we get some nice candle body closures above here, any candle body closures below here on the 4 hour or the 1 hour, we will probably continue to the downside, and we might push lower to around 73 flat. If we do go to 73 flat, I'm looking for some high risk buys, but we must remember that we are in a bit of a risk off sentiment with our risk currencies, with our safe assets appreciating. So yeah, just keep that in mind. But yeah, we can take some high risk buys if we do come to this level again. Okay, so just be very mindful of that. If not, I'll be taking some high risk buys at this area here. If we do come down here, more than likely we will get some strong rejections. When I'm watching this, I'd probably want to see, essentially, I really just want to see Dixie just kind of just to respect this whole time frame key level. That's what I'm really liking, and then I can if that tends to happen, we can see Dixie depreciate and our risk currencies start to bounce, and kind of break out of this little structure here, then slowly push to the upside. But yeah, I'm just being very mindful of that. We have had a strong sell-off, especially with Federal Reserve tapering. Obviously it being faded out, not enough to break like this lower time frame bearish structure, and we did just continue to push to the downside. Okay, so when I'm looking at my key levels, we are respecting them, obviously on the higher time frame. So we are So we did get a nice entry, not entry. We did see the candle come down to a high time frame key level, but failed to close. You know, which is essentially signaling some weak sell side pressure. So, like I said, I'm intended to take some high risk entries here. If not, I'm gonna be taking some shorts and taking them down to these lows here. So really, it will depend on the market structure and what I'm seeing on the lower and the higher time frame. So moving on, going to Euro USD. Euro USD, we can actually see. So we can actually see like the Aussie is like the weakest among our risk currencies. So what I'm really liking here is if we can actually stay above here, like this is just a little key level here, around 118,800 or 750, sorry. So if we can break and retest above there, that would give me a lot more buying pressure, and that would help with our Aussie longs. I've said this so many times, when Aussie dollar's up, Euro dollar's going to be up, sterling dollar's going to be up, but there's always going to be some variances, obviously due to macroeconomic conditions, okay? You know, so it really depends, but overall, if they're all up, because at the end of the day, Dixie is calculated against all these major currencies. I'm not going to go into detail, but that's how the dollar is valued. It's essentially the opposite. Okay, so that being said, so that being said, if we can break and retest above here, you know, I'll be very inclined for some safer buys. Let me put my key levels back on. Yeah, or if we can actually essentially, because obviously with this flush move here to the upside, I'm really liking if we can actually retest back to 118,400. If we do retest at 118,400, you know, we could take some medium risk buys. However, if we do break and retest below here, we will push to the downside. I don't really see that happening this week at all, unless you get some very dovish tones from the ECB and that, some weak data. And the only reason why we're going to get weak data is just due to, you know, the current COVID lockdowns, and, you know, all the COVID variants and so forth. So that's the only thing that's essentially going to bring the euro down. Obviously with the variance, that's going to decrease revenue, and decrease forecasts for businesses. So yeah, I'm not really expecting that. So what I'm expecting is taking a higher, like, to me this is like a medium risk buy at 118,400, and if we can see Dixie just to come back up, respect a high time frame key level, I can definitely see that happening on euro. However, if we reckon retest below here, we could mirror this flush move here overall, but I just don't think there's enough dovish headlines for euro just to pull back that much. You know, because that's roughly 100 pips. I just don't think that's really possible for the euro to push down that much. So looking at sterling's just been a rocket ever since bouncing off these lows at 136. Obviously, there's a lot of buy side liquidity at these lows here. I was really expecting us just to stay below this range here. I was only expecting us to break above this range. Probably sometime this week, but we actually did break above there. What I'm really liking is if we can essentially stay above this little liquidity zone here, which essentially is this like high time frame range here, these highs here, these highs here. We did play in this range a little bit, and we did essentially mirror, well, not essentially, like not an identical mirror, but we did like mirror this move to the downside. So what I'm really liking, like safer buys for me, if we can stay break and retest above 139 flat. If we can stay above there, we can see continued buying pressure to the up, can see more pressure to the upside, but I guarantee you we will just consolidate a bit, generate a bit of liquidity, especially with the central bank, the Bank of England interest rate decision coming out on Thursday. So we've got to keep that in mind. So yeah, I guarantee we will during a bit of consolidation here. If not, I'm probably gonna wait till we come back to 138,700. So just gonna watch how we react at these candle body lows. So yeah, I'm just very mindful of that. Obviously safer buys are breaking retest here. If you're a bit of a risk taker, you can take the shorts here, but I'm not inclined on that. Yeah, like just the way sterling's been moving lately, I wouldn't be too inclined on that. So yeah, so we got to keep that in mind. Moving on, GJ is very similar. I'm really preferring if we can break and retest above 152,800. If we can break above there, we can recognize a lot of buy side liquidity, but we cannot deny, I guess you could say, this bearish corrective structure. So yeah, I mean, we can't really deny that at this point in time. So it's very curious, but we actually did break above there. So like I said, if I could see a lot of buy side liquidity once we break and retest above there. Nice candle body closures, because what I'm always looking for, I'm looking for like high time frame candle body closures, so 30 minute, 1 hour, 4 hour. So I'm usually always looking, because that is just a sign of obviously more buyers waiting to get into the market. Because essentially the market, give you like a brief overview, the market just moves like this, right? Goes up, consolidates, it's just accumulation. I should say this is accumulation, and then you distribute, then you consolidate. Obviously buyers are cashing out of the market, sellers are catching their little moves, then you consolidate, and it's just rinse and repeat, really. So that's essentially the market. In my opinion, you can always make money in a range. You can always make money in the market, in my opinion. You got so many opportunities. I don't want to go into too much detail about that. So moving on, obviously if we can break and retest here, I believe we will consolidate. I guarantee you, whatever the tone of the central bank is, so that will do like a massive liquidity grab, whether it's to the upside or the downside. So wouldn't be surprised if we just pull back down here, because you will see like 80 pip moves like in a matter of like 10 minutes, and then that's just like a fat liquidity grab. So just got to keep that in mind. There is a lot of opportunities when these high impactful data gets released. Obviously take that with caution, and it takes experience to know obviously when to get in, where to set your stop loss and you take profits. It's another story. I'll make a video about that one day, but yeah, it's another story. So what am I looking at right now? So yeah, like I said, break and retest above here, but I won't be surprised this Bank of England sentiment, we pull back here to these like candle body and we close here. So won't be surprised, alright? And it kind of matches with this little messy order block here before we did push to the downside. Obviously we break below here, we are coming down. We are 100% coming down, I guarantee you, because this is like a little tight consolidation area here. Break and retest below here, we will come down and essentially mirror this move here, because we dipped down, consolidated, did back up, right? And you notice here we got 3 strong 4-hour candles, consolidate. We got about, it's actually 2 4-hour candles, and look, we consolidated in this little area here. It's just a key level of interest, which is essentially these previous lows here. Okay, so like I said, break and retest above here, safer bias, but I guarantee you if the report is positive, we will let liquidity grab back down to 159,700. So obviously time will tell. So Usdcad, we don't have much Canadian data being released this week. Can definitely tell that, like I did mention, we were going to consolidate for the majority of the week. So we did consolidate for the majority of the week. We did see us get a strong liquidity grab, and then we did push to the downside. Okay, but we only pushed to these previous lows here. Okay, so I won't be surprised if we if we just consolidate in this little tight range here, fails to break above this range, we will push to the downside. If anything, we might get a bit of buyer's momentum. If we do get some buyer's momentum, I'm looking if we can retest 125 400. in order for that to happen, I'd probably need to see Dixie start to appreciate, bounce off these USDcad, just bounce off these and continue back up. But obviously that's all dependent on macroeconomic data that's going to get released. Obviously the biggest data is going to be on Friday. Okay, so we might see some strong we might see like a strong liquidity grab. We even might see USDcad come up to these levels here, depending on Canadian employment data as well. So we might see us pull back up here, and we will push to the downside. Okay, so we must keep that in mind. So obviously depends on the macroeconomic, well, the employment numbers actually get released. Okay, so we must keep that in mind. And obviously if we do see oil start to appreciate, we can definitely take, that can give us a bit of a bias to take some longs on CAD. Obviously it depends on the other macro data being released, like goods and exports data. Okay, so Dixie, moving on to Dixie. So what I'm really liking here, if we can respect a high time frame key level at 92,250, so if we can respect that high time frame key level, I'm really liking if we can continue this bearish structure. Okay, if we do pull back up a bit further, won't be surprised if we come back to this little high time frame order block with these lows at 92,425. So yeah, that'd be your high risk shorts on Dixie. I don't trade Dixie. I use it as a confluence, or I use it as like a kind of like, I just use it as a sentiment, because like I said, the value of Dixie is against all major currencies. Okay, so essentially if USDcad trading down, you're more than likely going to be going long on euro or sterling dollar. Okay, or you're going short on USD loonie, because USD is up the first pair. So like I'm gonna go show you something right now. Okay, if you pull up USDcad, right, pull up Dixie. Okay, obviously it's a bit different. Let me take this off. See, yeah, it's a bit different, looks a bit different, right? But tell me, like, what is the big difference? Okay, what is the big difference? Literally tell me. We got this strong rally here in Dixie, starts to consolidate up, then we melt down at this significant price level. Okay, USDcad, essentially we get this flush to the upside, and we're still trading up, and then we did spike back up here, then we push down. Okay, so tell me, like, what is the difference? Like, there's not much, there's like no difference. There is, because you're trading something else against it, but the market structure overall is the same. Like, it's essentially the same. If you don't think it's the same, then I don't know then. I really don't know. So yeah, we can definitely recognize that. So yeah, what I'm really looking at is if we can actually come back up to 92,425. So that'd be very high risk. That'd be very high risk. If that does happen, we will get some strong rejections. Other than that, looking to see how we react to our high time frame key level. I do think we are going to spike a bit up, just with historical repetition, because I know Dixie likes to rally at the start of the month. So just got to keep that in mind. Gold, I haven't traded gold in like ages. Like, I'm not gonna lie, it's been a while. Anyways, so gold, gold's been giving us some nice moves. We actually recognize some buyers exhaustion at these monthly highs here. We did push to the downside, obviously, with Dixie's starting to appreciate at the end of the month, because we've got to realize this is like 12 hours of price movement, which was essentially New York and London session, a bit of London session. So with that being said, I do want to see if we can actually break and retest below 1812. If we can break and retest below 1812, we can identify a bit of selling pressure, but I'm not really inclined with everything else I've discussed with Dixie, because if gold starts to push downwards, I don't think we're going to push down that far. Okay, if we are going to push down that far, like it's I'm really looking at like 1808. Like that's a significant price level. To me, you know, with these candle body highs here, that's a very significant price level. And then especially with this flash move to the upside, even coming down to 1805, that's, you know, that, to me, that's very significant. But for now, if we can break and retest below this high time frame key level, you know, more than likely you can take. It is an idea to take some shorts, but I'm not too inclined on that. Do want to see how I react at 1808, and essentially when we get to 1805, that's what I'm very inclined to see. You know, dollar's just been ranging a bit. It is what it is, but we cannot deny that we are in a bullish corrective structure. We're essentially just correcting these lows here, right? So that being said, I do want us to see break above here. Essentially break above like this little sensitivity area here around 1832. So with that being said, I am, you know, like, to me, I'm not too inclined to take some sells, just because I know how gold is and how it can operate. You know, it's a beast. You know, it's nothing like your currencies. Like, it's a different beast. You know, it can whipsaw you. Anyway, so significant price levels to me: 1808, 1805. Break and retest below this key level here, we can take some counter trend sells. So, but I'm very cautious to see how I react at 1805. But yeah, so just be very cautious when you're trading gold. But yeah, these are essentially the levels of interest I'm really looking at. So looking at the Dow, not really much to talk about the Dow. Like, economy's like up to shit, and with us trending at these highs, I think, in my opinion, I think, like, you know, this is a strong, like, this is a very strong sensitive level at the moment. We're in this stuck range. We're in this tight range at the moment. Obviously, if we can break and retest, obviously safer, break and retest above 35, 145, we can take some really safe buys, but I'm not really inclined on that. To me, I'm expecting like a deeper pullback. I do want us to see us come down to 34,489 to this higher time frame key level around this area, and with these essentially these candle body lows on a higher time frame. So yeah, I do want to see us pull back a bit, because especially with this pullback here, we then did pull back here as well. So I'm expecting us to pull back to this higher time frame key level. So obviously, for that to happen, you need to see Dixie start to appreciate and a bit of fear in the markets. Okay, so moving on. Lastly, I just want to look at the 10-year. Okay, so 10-year. All right. I won't go into too much detail, but if you do look at the 10-year, like, I think 100% everyone should look at it every now and then. Okay, you should definitely look at the 10-year. 10-year, even the 30-year, 5-year. So let me give you like a brief overview. So when it comes to like the 2-year, 3-year, 5-year, 10, 15, 20, all the way up to like the 30-year. So with US Treasuries, so they're like long-term economic forecast. Okay, when it comes to the the 1 day, the 1 month, anything up to the 2-year, they're like, the yields are based on the Federal Reserve monetary policy conditions in that time frame, so with the next 2 years. Okay, so if yields are high, if yields are rocketing, like if long-term yields, so long-term yields, anything above 2 years, so essentially 3 years onwards, if they are high, more than likely they're forecasting economic growth. And what does that mean when they're forecasting economic growth? Obviously, the economy is a lot more stable. They can start to hike interest rates. They can start tapering their bond buying programs, so forth. Okay. Obviously, inflation is anchored at 2%. Employment's amazing. Yeah, cool. But did you notice when we went to these highs, we failed? Like, we literally failed to continue back up. The fact that we've been falling so hard is a bit of a fear. It is a bit of a fear. But I'm really liking, because we got to recognize, you know, this was the point here, like 1% flat, where we did just get a strong push to the upside. So this is we're at a very sensitive level at the moment. If we break and retest below here, it's going to be up to shit. I guarantee the US economy, the world will be up to shit. The only reason it's up to shit at the moment is just because of these delta variants. Like, it's just delta variants. There's a few other things. I'm not going to get into too much detail about that. Also got, you know, China cracking down on their own tech companies, tech firms, educational firms. Like, educational firms can't make any Chinese educational firm can't make profit anymore. Like, anyways, I don't want to go into too much detail about that. So, like, essentially, the economy, it's, you know, it's like there's signs of overheating a bit, obviously. But yeah, we have to recognize that. We're just gonna look at the 10-year. We you know, it's very good to look at the 10-year. And just see at the level that we're at the moment. So obviously, if we break and retest below here, you know, that's some fear in the market. Like, that is some strong fear. Okay, because like I said, your long-term yields, your long-term bonds, they're forecasting economic growth in a set period of years. You know, like I said, 5, 10, 15, 20, 30 years, whatever. Your 1 to 2 years, or essentially 1 month to 2 year bonds, the yields, they're focusing on the Fed's monetary policies in that set period of time. Okay, so it's going to be very mindful of that. You know, we are in a bit of a risk-off sentiment. That's why we've seen our risk currencies just be decimated. At the moment, you know, strong sell-off. We see Dixie continuing back to its highs, but this is essentially a make or break level, because we did just get a strong bull rally up. But to me, I just consider this as a bit of a pullback. If we break and retest below here, then yeah, you know, that's a bit worrying. This is just a sensitive level. Anyways, so I'm gonna leave it as this. If you enjoyed the video, please be sure to like, share, subscribe. If you got any questions, please feel free to leave a comment. If you got any queries, please let me know. I've got my details from my IG, Telegram, and moving on. I hope you all have a great trading week. I'll talk to you next time.